Hey everybody, it's Pete. Good morning. Welcome to an episode of today's Best Stock Picks. It is Friday morning, February 19th, 2021. Thank you so much for joining me here today. We have a lot to cover, but we're going to get right into it. What's very interesting today is we're going to talk about a stock whose shares just became unlocked, available to sell, and George Soros has actually indicated that he's going to be getting rid of his shares. So it's going to be interesting to see how this plays out. It's a very popular stock right now. It's one that we were pretty actively trading in the boot camp. But there's a obvious way to trade the stock without getting steamrolled if those shares come out and they start to what's known as being hit the bid, where you start to see a lot of selling and aggressive selling. There is a way, though, if you're smart, to read the order flow and read the tape to say, okay, now it's a little bit more clear to jump back in the water and start to look to start building a position in those shares again. So we're going to talk about it today, but I'm going to be very clear. I'm going to give you a very step-by-step way of identifying when the smart money has stopped the selling and when it's going to be obvious that you can start to get back into the stock. If you find these videos helpful, definitely click down below and subscribe. That would be awesome. I really appreciate it. But just as importantly, we do a lot of trading education as well as the stock pick videos. So you'll also get updates on new training that we do that we post here on social media. So what we're going to talk about first, though, is we're going to get a little bit into the market. Now, if you've been watching the videos, especially over the last 4 or 5 days, and really more defined into the last 3 days this week coming into the week, doing research last week over the 3-day weekend and really digging into tape reading, we had a feeling coming into the week, and I know I hate to use feeling, but we had a feeling based on what we were seeing that there were kind of little cracks under the hood, and we were expecting some profit taking this week, and so far we've got it. What's been a little bit deceiving, especially if you're a day trader right now, is the market opening lower, and then after about an hour or so, just slowly crawling back up and closing near the highs, giving a sense of confidence that the market has bottomed out in the most recent price action. Obviously, we're still pretty high up there, where you feel like, okay, those gaps lower, the pushes lower are not that big of a deal. However, what I'm going to show you right now shows that's not really the case. So what does that mean as a trader? That's really the big thing. What does it mean? Like everything that we see on the charts and reading the tape and order flow, how does that affect you as a trader? It's one thing to spot it. It's another thing to know what to do with it. And we talk about this all the time in the boot camp, which is there's a difference between chart reading and tape reading. If you're just reading charts and don't know how to use the information, you're just a chart reader and you're probably not getting paid. Being a tape reader means you make more distinctions. You start to pile those pieces together, and then that affects how you actually trade. It affects how much shares you go out and get. Your position sizing affects risk. It affects how you book profits. And that's really the next level. If you're in the markets and you're challenged right now to get profitable, these little things add up to huge profitability over time. And if you don't learn these little things, you kind of feel like you're going forward and then back and then forward and back. So these little pieces that we talk about, they add up to a lot. So we're going to actually head over to the charts right now, excuse me, and show you exactly what I mean about that. And we're going to start out with industry groups and sector groups. And you can see here very clearly that yesterday specifically, we're talking about nothing was green. So here's what was deceiving. If you just look at the market yesterday and you're like, oh, that's okay, we closed down a little bit, but the market was actually at the highs. This is actually what's going on under the hood. And this is the weekly pattern over the last 5 trading days. So we get a day like yesterday where if we go down to the shorter time frames, even if you're not day trading, you say, oh, this is kind of cool. We have a bearish gap, we bottom out, and then we start to see buying come back in. And that actually happened 2 days in a row. If you're an astute tape reader, this is generally what happens as markets start to top out a little bit. Now, I'm not saying we're rolling over in a big way. I'm not saying we're about to start this giant correction like a lot of people have asked me in the comments recently. By the way, that's also pretty important as well. One of the biggest things that I talk about in the boot camp is I really want to help you. I want to help you personally. Now, obviously, I can't help you personally here on social media, but leave a comment below the video. And if you happen to be in the boot camp right now, I'm challenging you again, participate in the community. It's the best way for me to help you, and we could have these kind of discussions about the ideas that we're looking at, right? So that's what's going on with the market. So how does that affect what I'm doing? So it essentially comes down to, I have lowered my risk. I've lowered my position shares in most of the ideas that we're looking at. My swing trades have been cut back dramatically. And now we are very, very stock specific. So some stocks, for example, like CCIV, the last couple of days has been very tradable, very tradable. But then you get some stocks like Twitter, which paused, which is actually one of the stocks I'm going to be looking to initiate a new swing trade today. So some of them are obvious, some of them are not. So Twitter is one of the ones that are a little more obvious. But the stock, what we're talking about with George Soros, where the stocks became unlocked, is obviously Palantir today. So what does that mean? What does that mean, and exactly how does that affect your next trading decision? Well, I can tell you from an active trading perspective, this stock is, and I'm going to use a context here. So again, everything here is for educational purposes. It's tradable. When it's in play, when the smart money has attention on the stock, there's volume, there's volatility, there's obvious direction, and that's what we want. We want to feel confident that smart money is doing something, and then we just jump on and we find a spot to get involved with them. But right now on the daily charts, you can see that we're still well offered. We're still seeing some selling order flow. The news was great, tradable, right? Now it's back to normal, all that kind of stuff. Earnings came out, right? Another thing this week. There's a lot going on in the stock. So how do you feel to start getting back into the stock without feeling like you're bottom picking the stock? Most people look at charts like this, which is the daily chart. So we're going to actually zoom out a little bit to tell you what I'm going to be doing, and I'm going to be watching the stock on the weekly chart. I can see there's not a lot of price history. It just came public in September of last year. I am going to be looking for this price action. Right now we have the opposite. The opposite is on the weekly chart, we're well offered. So on the weekly chart, the last 2 weeks, we're opening here, closing here, and doing that from 1 week to the next. I want to see a minimum of the opposite of that, which means on the weekly chart, which would be next week, I want to see higher highs, higher lows, closing near the high, and taking out this week. So that essentially means that I'm going to start looking at PLTR if and when it starts to get over $30 with that specific price action on the weekly charts. So you had earnings this week, you had the unlock period this week. There's a lot going on. Here's the way I describe it when we're trading in the community. Let the market tip its hand, and then you just hop on board. That's what order flow is. That's what tape reading it is. You're finding a side, then you're finding a spot as close to the optimal entry. And right now, the side is not obvious. It's exciting, it's interesting, but the side's not obvious yet. So I just described how to wait for the stock to become obvious. So next, we're going to talk about Walmart earnings yesterday. Walmart was not good, and the stock got clobbered. So how does this play into a new opportunity? So again, we're going to stick with the same time period. So you can see here over a period of 5 days leading into yesterday's bearish gap on the Walmart earnings, you can see that it actually took out some pretty big levels. So as of right now, we're not looking to dip our toes back into this. The numbers weren't good. The earnings weren't good. If I could just get a little bit more specific, reading down into here, flipped a loss of almost 2.1 billion against 4.8 billion in profit a year ago period. That is just really not good. So we got a lot of messages yesterday about should we be looking to buy this dip in Walmart? And the answer is no, absolutely not. I am not looking to buy the dip. I want to see, before I get involved again, I want to see smart money stepping in, holding the bid. Then I'll feel a little bit more confident. So a lot of people brought up the 135, 136 support level. I want to be clear on this. There's a big distinction between a stock pulling into support and you say, okay, I see that's where buyers did something last time. I could manage my risk, versus there's obvious order flow. Buyers are already pushing the stock in that direction, and now I'm going to look for a spot to get involved. I prefer to trade where order flow is obvious, and then I hop on board. Walmart's going down right now, and order flow, especially bullish order flow, is not obvious right now. So I'm just going to step aside and wait for that to bottom out. If and when it does, then I'll get involved. And we talk about this, again, quite a bit in our private community. Some trades you could build an argument for, but they're kind of like, maybe. That's not where you want to allocate your money. You want to allocate your money where, like, oh, wow, it's really obvious. I hope I get my entry signal. That's the difference, again, between chart reading and struggling versus tape reading. And you build that argument, you put the pieces together, and you finally get to the point where you're like, okay, I understand. Yeah, maybe it's a weak argument. Maybe I was trying to talk myself into it. You learn to stay away from those ideas, and then you get to the other side where you're only taking the best ideas. And that's really where you let your edge start to do the work. One other piece of news that we want to talk about here today is Uber. This is not good. Again, in the UK, they're talking about making them employees again. And I don't want to get into the whole detail of what the news is, but the drivers should be classified as workers, which means holiday pay and entitled to the minimum wage. So we'll see how that plays out itself. Again, not necessarily a tradable event today for that particular, but you do need to know if you happen to be in Uber and Lyft. They've actually had a pretty good run the last 6 months. So we'll see how that actually affects the price. You can see it's actually down just over 2%. Could be a viable opportunity today. We'll see. We'll let the tape tell us. On the strong side, as far as looking for some new opportunities, WDC, Western Digital, Seagate Technology, and Micron all holding up in what we call well bid. They're actually holding the bid, well bid, closing near the highs. These are new opportunities that we've been talking about actually all week, just kind of dancing around with the rest of the market. So I'm still looking for them to catch a bid. Interestingly, one that I haven't talked about in a while is JP Morgan. After earnings, Goldman Sachs, JP Morgan, Morgan Stanley, they ran up into earnings, pulled back, and now are actually pausing comfortably above the prior level. So the first thing you want to do is you want to jump in there and see if volume is showing us that there is not distribution. So in other words, when a stock pushes up and pauses, you want to see lighter volume, and that implies nothing changed, and you can look for follow through. In this case here, though, we actually do have slightly higher volume, which is not what we want to see. And you just zoom this out just a little bit. You can see this here. During this consolidation, classic trading says during that pause, you'd want to see lighter volume. We gapped up and paused. That's good, but the volume is heavier. So I'm going to be looking at this as a future trade because now I'm actually expecting it to pull back because of that heavier volume. When you start to get churning, that is usually where you start to see a reversal. So it's going to be interesting to see how that one plays out. And that's really more of a lesson than a trade right there. And last but not least, we're going to finish with Upwork, actually one of my favorite patterns. Maybe I'll be looking for one more day to the downside, but this is a really good clean push up. Pull back. I'm looking to buy yesterday's low as support or as a breakout level. So if we open up here and push lower, so here, push lower and reverse, that's going to be the trade. Now, you know, it's kind of interesting is we had a couple of questions yesterday about, I don't understand why you're looking to buy yesterday's low because the stock was going down. And I can't emphasize this enough. When you understand order flow, you're first and foremost getting your conviction level from the order flow, which is the smart money, the deep pockets pushing a stock over days, weeks, and hopefully months. That's a big commitment in dollars, right? The daily chart is nothing more than where we're fine-tuning our entries nearest the optimal entry point so that we have a tighter window for our risk in exchange for smart money pushing that stock back up. So that's really what we're talking about. When a stock is pulling back that's strong, we're just putting a line in the sand. We're using yesterday's low for tape reading. And this way you have that line where it's like, okay, it's stronger, it's weak, it's stronger, it's weak. Very similar to the last trade you put on. You put on a trade, nobody knows that stock better than you because you're in it, right? It goes up, you're happy, it goes down, you're like, ah. So that's what we're doing when we point out these levels, like I pointed out 30 in PLTR. That's a part of tape reading. You're understanding where you want to get involved and understanding where that stock is moving closer to or further away from. So if we open up lower, yesterday's low is my line in the sand. That's how I'm going to start reading the tape. There's a lot more to it, but that's a pretty good initial lesson there. So that's what we got today. A quick week. It's Friday already. If you find these videos helpful, definitely click down and subscribe. I'd really appreciate it. If you want to learn how I do this and get actually all of my strategies and actually get my entries, exits, and profit targets sent right to your phone, click down and learn about the boot camp too. I think you'd be pretty interested in that too. So have a safe day, have an awesome weekend, and let's have a profitable day, everybody. Take care now.